Good morning. This is Jim Colburn of Commodity Research Group. I'm here with Andy Lebow, also of Commodity Research Group, and we're here to talk about energy markets. To learn more about us, you can check out our website, commodityresearchgroup.com, where we post our podcasts and blog. We would like to thank our friends at EKT Interactive Oil and Gas Training for hosting this podcast. Check out their newsletters, podcasts, and learning modules at ektinteractive.com. This podcast should be construed as market commentary, merely observing economic, political, and market conditions, and is not intended to refer to or endorse any particular trading system, strategy, or recommendation. We are not responsible for trading decisions taken by anyone. Information is not guaranteed to be accurate. This is not an offer to buy or sell any derivative. Today's April 12th. And Andy, I just want to start out and mention your monthly that you write for the CRG website and for others. You mentioned that a few things took place over the monthly in the previous month, and there was an attack on Saudi infrastructure. There were 2 OPEC meetings. There was new extended lockdowns in Europe, a Suez Canal issue, Iranian sales to China, the U.S. vaccine rollout, just to mention a few, and that's over a month. So I want to express my sympathy for you as an oil analyst trying to get through this past year.
Well, thank you, Jim. Last month was definitely a headline news month. And, as you and I have said often on these podcasts, there's always something going on in oil.
Yeah.
Just last month seemed there was something going on every day in, petroleum and crude trading. This month, not so much. This month, the first few days have been pretty quiet, and amazingly, the market's just trading in a really narrow range. I
Right.
think, as evidenced by, as we had talked, as evidence is what happened to the option vol last
Yeah.
week.
It,
And, you might want you might want to mention that. We might want to talk about that right off the bat because it's really unbelievable.
right. It was like kind of like a wily coyote off the cliff vol move, because on Friday, volatility front month vol got crushed by about 6 points, which is a big move. I mean, it's the front month, so there was a little time decay in that, but it was like the option market realized that, oh, guess what? We're in a trading range, and they started marking things down. It wasn't on heavy volume, but they did mark things down, and I think it's kind of like a white knuckle narrow range. Not a. I don't think anybody's relaxed in this market, as if they know where this thing is headed. Or when people sell vol, sometimes they feel like they know where it's not headed. So there's a lot going out there. Why don't we begin with the OPEC meeting itself, because a lot came out of that, and OPEC is over the past year is increasingly involved with these they're not only month to month meetings, but they're major policy changes come out of these monthly meetings now.
It's amazing how these OPEC meetings have changed just since the pandemic. But I think they've done a really good job at trying to manage the market. And one thing that they must be doing is getting a better handle on some of the data. I think there's, in my opinion, it seems that they're using a lot of these, the mobility data and a lot of the big data to try to forecast where demand is. And in fact, prior to the last month's meeting, they put out a monthly demand numbers.
Right.
I don't think they've done that now for a couple of meetings,
Right.
and they're just trying to forecast these monthly demand numbers, and then make some attempt at matching the supply to those demand numbers. Now, the last meeting, was interesting in that the market, as a result of what the Saudis were saying, was expecting that that they'd be unchanged. There'd be no production changes because the Saudis were worried about demand faltering, and most of the rhetoric before the meeting led the market to believe that no change. And then they came out and increased production by 2 million barrels a day over the quarter. Well, actually, from May to July, which was surprising. Almost as surprising was the fact that the market the next day went up, which was kind of hard to fathom.
Hmm.
The following day was Good Friday. We were closed, and then on Monday it did get hammered. So it's hard to see where they're heading. I think they would try, Jim. In days past and meetings past, they would try to make a longer term, make some longer term changes and longer term assessments. And now we're into a month to month assessment, and it's really hard to see. Are these policy changes? Is this the Saudis yielding to pressure from some of the OPEC members and saying, okay, you know what, we think demand's going to be good enough over the next couple of months where we can increase production, and we will go for it.
Yeah, it seems like step one is to get the price up, and
Right.
step two is to get the volume out. It looks like they want to capture any new any recovery in demand that's out there, and not let non-OPEC get any of that. But what do you think about their demand projections like that? I mean, you said 2 point, was it 2 point something million?
That was on that's the supply that they're
So,
letting out from
right.
from uh,
Yes.
from May to July. I
So,
thought their demand numbers, to me, they're a little high, but I'm a little more conservative than they are on the growth. They think that from April to July, demand is going to go up over almost 3 million barrels a day. So, looking at those monthlies, the monthly demand, they said, all right, well, if we think that, then there might be room for another 2 million barrels a day of supply. I'm closer. They're up three. I'm closer to like up two and a half.
okay.
Um, I'm constantly kind of marking it down on extensions of the lockdowns, and then increasing it on GDP views and vaccine distributions. So it is, it's hard to get a handle on it. Now, the other thing, Chip, that's really important is the Saudis also reserve the right to change what they're going to do next month.
Right.
So, they may not. Maybe they'll say next month, and this, of course, will be, as you said, number one, get the price up. So this will be price dependent. The market is on its heels. Maybe they'll say, hey, you know what, we're not going to increase quite as fast, right? On their unilateral increase. So in a way, while these meetings are new, the Saudis really have come back as a swing producer. They have most definitely taken the role of the swing producer, which, as you and I remember, was one of their guiding principles within OPEC in the 80s and 90s.
Yeah, it looks like I guess if you go back a little further, the Rockefeller strategy of giving competition a sweating by lowering prices for a while. They tried that about a year ago, and I think that's no longer. I don't think they like the results of that strategy.
No, because they gave themselves a sweating.
Yes.
Yeah, so I don't think yeah, that strategy was, I think, ill-advised and certainly ill-fated given, given what happened. I think we're coming up, right? Well, aren't we coming up on the
Yeah.
anniversary of the
Right. It's
of,
April, yeah.
-40? So,
Right.
a year ago, they were scrambling, to say the least, but they
Yes.
did the group did get its act together.
Yeah. Terrific job.
Yeah, they've done a great job. Of course, they were helped by the world governments, all the stimulus that the U.S. and other world governments gave to the markets.
Yeah, if you think of storage, it was it was like a golden month for storage, or a couple of months for storage, and now all those contracts are being it's a year. Maybe many of them were done a year out, and that year is up, and now your storage facility might is definitely not worth as much,
No, I
right?
mean a year ago we were going into very steep contango for good reason. You couldn't see the end of it,
Right.
right?
Yeah.
You just couldn't see the faucet ending at that point.
And the additional information we get these days of satellite pictures of ships around the world. It was like flotillas.
Yeah,
Yeah,
there was no end, right?
there's no end
Because
to it.
we were filling up. Yeah, there were flotillas of crude tankers with nowhere to go.
So,
Because at that point, floating storage was just going crazy.
we now have the U.S. growth, world growth should be up sharply this year. Should add to oil demand, but it's not what we would call synchronized world growth, like we were talking about a couple of years ago. Just give us an overview of how you're seeing overall growth, and maybe we can get into U.S. as well.
Well, if you go from product to product, refined product to refined product, I think that global diesel demand this year is probably going to be unchanged or grow some. Petrochemical demand, which did well last year, is still going to do very well this year. Diesel's going to grow over last year. I guess my comment was more towards 2019. Diesel's going to grow nicely this year, as will gasoline relative to 2020, but relative to 2019, we're still going to be, a million to 2 million barrels a day, probably below 2019 when the year is over. Maybe less than that, and we'll definitely be talking about U.S. gasoline demand coming up. And still the big problem is that we can't get away from is jet fuel demand. That is it's still problematic because we have international restrictions still, and the business travel is not where it was, and it probably won't be until maybe into 2022. So some analysts are saying 2023. Travel, I think domestic travel, U.S. travel is certainly going to pick up this summer and into the fall. But again, those international routes, we'll have to see when and how they get lifted.
Yeah,
Um,
it's a problem. I think let's in the U.S. we're getting the vaccines out there, and people they want to fly someplace, and the question is, where do you go? And we can't all go to Gibraltar or Faroe Islands, where
Mm.
Europe is still still in lockdown. So
Shut. Yeah, Europe's
yeah,
still shut, and
yeah,
it's April. So are they going to be open for the summer season?
right.
I guess they're going to try, but
But driving, we can kind of. I think there's going to be some major pent up demand for gasoline, and not for diesel. I think
yeah, yeah. No,
I'm sure it's
I think that's definitely the case. The EIA, just increased their gasoline their view of gasoline. I've increased my view of gasoline by a couple of 100,000 barrels a day, and it could be even more.
Mm,
Yeah, I think there's definitely pent up demand, and we'll see where the animal spirits prevail on gasoline. Gasoline's in pretty good shape. We had a build last week, but overall, if you look at gasoline inventories, where day supply is actually behind the 5-year average, so that's pretty remarkable. So yeah, I think gasoline globally, however,
right.
there's another, that's another issue. As you said, Europe's in lockdown, even though they use more diesel than gasoline. And we look at you look at some of the emerging markets, which are basically use gasoline. They're not getting the vaccine distribution that some of the more developed countries are getting, and that's going to impact on gasoline demand. No doubt. And I
Right.
think maybe that was your point.
Yeah, and
Talking,
less tourism there as well.
yeah,
Yeah.
right,
Yeah.
less tourism.
Yeah. And so you're seeing we're seing imports from Europe.
Right, right. That's certainly not a surprise. Last week's was a huge number. It was I think 1.3 million barrels a day of imports on gasoline. And looking at where the ARB is now, and some of the talk on barrels moving, it looks like those imports are going to stay pretty strong here for the next couple of weeks. Diesel finally is beginning to ease off some on the imports into the U.S. Some, but it's still pretty strong. So all that surplus in Europe because of the lockdowns, it's
Find its
goes
way.
to where the price is higher.
Yeah. So does that how does that affect the let's talk about refineries coming out of the freeze, and how does that affect the crack values, RBOB and diesel cracks?
The Okay, so the refineries, we had talked about. It's going to take them some time to get out of to repair themselves, not repair, to be repaired by
Right.
workers. I'm
Yes.
sorry, not repair themselves, but it'll take time to be repaired.
It's AI.
Right,
Yeah.
the AI, right. The crude production will come up faster, and it did. So as a result, crude stocks built, but product stocks didn't quite, and the cracks really, they blew out. Meanwhile, they're staying up there.
Yeah.
Even though the crude production has come back, the cracks still remain strong, and refineries are now running at a higher rate than they were prior to the freeze off. So I think, what I think is going to happen is that margins are going to weaken some here. I think the diesel cracks just rallied big the last couple of days, and gasoline cracks have stayed pretty strong. This is the WTI New York crack, but I mean, you could just take the Brent crack, and
Hmm.
they're strong too, and margins are decent. They're not horrible.
Right.
So runs are going to increase. Certainly, runs are going to increase, and I think we'll see these cracks come off some. I think we'll see these cracks come off some. I don't think they're going to collapse though, because as you mentioned, Jim, the gasoline demand, should be pretty robust here
Yeah.
over the next couple of months, and as we move along into the summer.
Yeah, that's kind of the of all the wild cards, that's it gets back to how quickly these COVID infection numbers improve, and how comfortable people feel and going out. But it just seems like there's a lot of pent up demand to drive to go places.
It also seems as though politically, I'm not sure any of these governors want to lock their states down again.
Right. Yes. So when you see, like in New York, we've had a flattening out and then a little rise in infections, and it seems like it's more of an indicator of economic activity picking up. So perhaps when you have the younger folks, their parents and grandparents are vaccinated, they feel more comfortable, going out to restaurants and bars and such. I don't know, and they're getting infected, but maybe not. It's not as dangerous, obviously, as their parents and grandparents. So
R-
it's not necessarily oh no, we're going into lockdown type of number. It's more like, oh, the economy's picking up. So
Right,
you know,
right.
and
I guess if we get to the point again where there are no beds, the
yeah,
governors, no hospital beds, the governors will have a tough decision to make. But
right. And I'm talking New York and some of the other states like Florida, a little uptick in infections, but obviously they're not going to lock down. They're open for business.
no, they're not locking down.
Yeah.
Texas isn't locking down. I don't
Yeah.
think Michigan's going to lock down.
Yeah, Michigan is like that's not their infections, I think, are up to record levels. I'll have to look, but
Yeah, but I don't get the sense that the governor is
yeah,
ready to wants to
right.
lock down.
Especially a northern
Too much
state.
heat. Yeah,
Yeah, going into the nice weather. And I think people understand what this is about, and they can do their own risk reward.
right.
So yeah, so I'm looking for for me. I guess I have this bias when my first commodity job was at the USDA and the World Agricultural Outlook Board, and we came up with supply demand numbers in a committee. So if somebody was very bullish on, say, corn demand, it took a couple of months to get up to that number because you're dealing with you had to get a consensus. So I'm wondering if we're going to see the same thing where the big three project higher demand, but they just can't get up to the real number right away. Demand will keep getting better. They'll keep revising demand upward as time goes on. I think that's what's going to happen. We'll see.
Yeah, well, we'll see. The U.S. numbers certainly are all heading in well, gasoline's heading in the right direction. Diesel's been a little bit rocky. I'm not exactly sure why,
Well,
but
one leading indicator: New York turnstiles are just they've improved, but they haven't broken out. They've been up at this level before, so that's the people going through the subways. Haven't seen that come back strongly yet. So we'll see. That'll be kind of, by the time that happens, it's the move has probably already taken place.
yeah, that's right. Yeah, that's
So
right.
so cracks, you think we're going to get enough product from overseas and maybe see it, and also we're at, I think runs last week were at 15 million. What's a
Right.
typical number for around this time period, would you
They're
say?
more the typical number would be somewhere in the closer to 16 and a half, 17 million. 16 and a half, let's say, because we'd be coming out of turnarounds now.
Okay, so we
So
would be
we're
at
we're
peak yet.
still we're
Yeah,
still below,
got it.
where we usually are. But we'll yeah, I think runs are certainly heading, they're certainly heading higher. I also expect that the crude stocks are gonna, we'll see some draws here as as runs increase. I'm not sure. I think net imports are gonna decrease some, and I think we're going to see some healthy crude draws coming up over the next couple of months, which maybe that'll tighten the curve. We'll see. The curve has really weakened, probably owing to the expectation of added barrels, like the month one to month. Well, actually, the June has come off from $7 backwardated to like $3.50
Mm.
backwardated. So it's like it's halved.
Yeah, I predicted that was going to happen, but I think that was about 8 months ago. I said
Yeah, all
that.
right. You know what?
I know. Yeah. So if I'm looking I look for little clues of what's going on in the market from options world. I mentioned the vol collapse in the front month. It's still, we mentioned this in previous podcasts, but the most open interest in on a strike continues to be the DEIS 100 call for 2022, and that's about 60,000. And the second biggest call is the D70 call at around 31,000. So it's almost double. And just the puts, not, June 50 puts got 25. The D's 50 put has got 15,900. I thought you would have seen that explode in open interest with these higher prices, but just not seeing it. So I don't know if that's an indication. There's got to be some hedging going on,
Yeah.
but maybe, I thought there would be an extraordinary amount. And so let's talk about U.S. production. How do you see that unfolding as the year goes out?
Well, I'm a little, the EIA has production rising to it, I think in the fourth quarter. Right. The last weekly was 10.9. I think in the fourth quarter they're seeing 11.4 million barrels a day. So that they've got it going up from here to about a half million barrels a day, which I think might be a little bit low, actually, Jim. I think there was a fair amount of hedging on that rally
Okay.
that we saw. Basis Brent going to 70 and WTI in the high 60s. The back of the curve didn't rally as quite as much, but you had some pretty good numbers back there
Yeah.
to hedge. So I think there was, I think there was some pretty good hedge activity. The rig count has gone up. There's usually a lag on rig count. Ducks are being the duck inventory is going down. So and the EIA did mention in this report talking about debt issuance by U.S. independents being. Do you remember what the number was exactly, Jim?
For March 2021 is 4.4 billion, which was they said the highest since August 2020 and higher than like the 5-year median. So they're making a big deal about it. That it's the U.S. oil companies, producers have been active raising money.
Yeah. So they're either they've got to spend it somewhere. So a lot of these, as we mentioned in many podcasts, the sector they're called is exploration and production. So
Yeah.
I think that the number is going to be higher than what the EIA has for both this year and next year. Maybe not significantly higher, but I think it's going to be higher for going forward into the fourth quarter. I would think it would be closer 11.5, 11.6, and
Just
then
a quick technical question, Andy. In the EIA weekly numbers, look like production was down 300,000 barrels for the lower
yeah,
lower
well,
48. What
right.
you know
Some
what?
of that was because they'll use the short-term energy outlook,
Ah,
and if the short-term energy outlook has different numbers, they'll revise it closer to the short-term energy outlook. So I think it was 200,000 from one week I think it was 11.1 to 10.9, and I
yeah.
think half of that was from the from the short-term energy outlook.
Okay.
Not sure, but I'm pretty sure that it was half. So that's why that's more of an accounting than reality.
So, anything you want to mention before I want to sum it up and then just ask you about prices going forward? But anything you want to mention?
Yeah,
On,
let's talk about the big. There's two things that I want to mention. One is the first is Iran,
right.
which and the second is related because it's China.
Right. Right.
And so interestingly, some of the numbers that are coming in from China on their April imports were down because they've got turnarounds coming, and their crude imports for April, predicted crude imports were down actually quite a bit. May or may not pick up, but you've got some big turnarounds in China. And also their inventories are high, and with prices where they are, when prices were when Brent was 70, they were not a buyer.
Right.
And that was probably one of the bearish factors in the market, is that China was, had stepped back.
Right.
And that's something we had mentioned over these podcasts. So one thing to watch is that China's inventories are high, and they don't have to buy, and they didn't.
No, they're very
Uh,
opportunistic, aren't they?
Very
Yeah.
opportunistic. Now they have bought more from Iran. The official numbers have their purchases from Iran at zero, but if you look at what they bought from the UAE and from Oman, that's almost a proxy for Iran. So those numbers have picked up. Some analysts have it at like 1.2 million barrels a day. I don't think so, but you
From
know,
from Iran,
from Iran, yeah.
right? Because
Uh,
it was up to 800,000 what in March
yeah,
or before
yeah, from
February.
300,000 in November. So they've really
Right.
kicked it up.
Right.
It looks like in April it'll be down, and May it'll be down. But certainly, that's an issue going forward for the U.S. And I'm sure that through back channel, I don't know if I should be sure or not, but that's got to be a back channel State Department issue, that how much China's buying from Iran, given that they're in their sanctions.
Well, that'll be one of those price moves when and if sanctions get lifted, the price of oil goes up because
Right.
right because it's already
Right, right. It's
they're
already
already selling
discounted.
as much oil as they
Right,
can.
they're already well, they have another. If sanctions ever get lifted, there's another million barrels a day
Wow.
that Iran could export on top of what they're surreptitiously exporting
Right.
to to China. But in any event, the and getting back to Iran, certainly that's going to be a big second half 21 issue for for the Biden administration, and whether or not we rejoin the JCPOA. They just had a meeting last week. The nuclear deal I'm referring to. They just had a meeting last week. They've established working groups, and there's a long slog. There's a lot to negotiate, and it's a long slog. And there are a lot of there's a lot of issues.
Oh yeah.
Kind of, I go back and forth, and then yesterday there was in there at Natanz, which is where they enrich their uranium. There was a blackout, which most everyone is pointing to the Israelis.
Hmm.
So there was a blackout. I don't know how that's that's gonna affect everything, but nevertheless, we'll be watching for, for the second half of the year after the elections. If I had to bet, I think there may be some progress made.
So it's another wild card to throw in the mix.
Right.
So
Um,
it's
yeah, Jim, I have one question for you.
oh yeah.
Okay, so we have these OPEC meetings,
Hmm.
and they're monthly. They used to be every 6 months where they'd make production changes. Do you think we're going to start like every month? Vol is going to pop going into these meetings, and like it usually does, or
Well, it hasn't been usual for a while now because in the old days when we started sitting next to each other on a desk, the oil ministers were tight-lipped going into the meeting, and so you didn't know what was going to happen. And I'd say there was less trust of them coming out with a good result, and so you'd get this huge increase. You get an increase in vol going in, and then maybe the day of the meeting you'd see a decline, and then it would decline after the meeting. But as time went on, especially now, there's so much commentary before the meetings, even by oil ministers, that you're sometimes the volatility is taking place ahead of the meeting. For the the last ministerial meeting, it seemed like people waited till after the OPEC meeting to put positions on. So there's light volume ahead of the meeting and more volume after the meeting. So there is no one way to look at these things anymore, except for, like obviously last year when the meeting was a disaster, prices went down, vol blew up. But I don't see any major recurring theme. Each meeting seems to be its own case.
Right.
Yeah.
Okay.
So yeah, yeah, and this was, this after this recent meeting, and the market was moving sideways. I guess it took a couple of days for people to crush vol.
Right.
I
Yeah.
guess you had to see. I don't know. There's still some. You still have a lot of people who are bullish this thing, but you know, it's it seems to me more like OPEC's looking for a balance at a particular price area than then we're going to see 70 or $80 down the road. I don't know. I mean, as quickly as they're coming out with new barrels, they seem to be managing this demand thing pretty well, as you
Yeah.
mentioned earlier.
Yeah. I think they're doing a great job.
So I guess the question is, will they manage it on the upside as well as they manage it on the like if prices go up to 70, are they going to come out with more barrels, or are they just going to let it run?
Yeah, that's we'll we'll have to see,
Right? Yeah.
right? I mean, there's a lot of when you're getting up to 70 or 80, particularly, yeah, if you're getting into the 70s and 80s, there are other issues.
Right.
Uh, non-OPEC producers, us, the US in particular, and then Iran is exporting. How much does the Saudi want Iran to get? Any excess revenue. So, there's a lot that they have to grapple with.
Yeah.
It's interesting. You said, well, what price? I think, you look at some of these, what price they need to balance their budgets. A lot of the Persian Gulf producers are right into the 60s. So, $60, 60 to 65 Brent would be fine. It
Right.
would be good.
Right.
It would be good.
Yeah. If
And
they get the
I think,
volume up.
yeah, if they can get the volume up,
Yeah.
but even if they can, I think that would be a good price. I don't see them really wanting to let Brent get, much below 50.
So let's talk about what do you think about crude prices going forward? I
Well,
mean,
the markets are trading at a narrow range for a good reason. I think a lot of us are kind of stymied as to what where we think the market is going. Not that not that any of us has, we're usually clueless, but I think, my own view is that there are going to be, as we head into May and June, there is going to be more supply. Will demand be strong enough to take that out? I sort of think so. I have less of a stock draw in the second quarter than I did naturally because there's going to be more supply on the market, assuming there's no change in monthly policy. So I think that takes the ceiling out a little bit on prices. But I think from here, slightly bullish, but also slightly bearish, Jim. So I'm
yeah.
just
Yeah.
like,
You're like the market.
yeah, it's sort of
So, but
it's sort of a it's sort of it's a hard call here.
so if I say to you, $50 put, let's say a June $50 put expires in May. You say it's going to go. You think it's going to expire out of the money or in the money?
That's going to expire. I would say out of the money. I'd be a
And
seller
I'm
of that.
talking
I would
WTI.
sell. I would
Um,
sell that.
and then for WTI, what about a June 70 call?
June 70 call. We're at 60 now. I would say also out of the money.
All right. So
But I think that may be more alive than the 50 put,
there you go. That's
only because I think I think we're gonna see those stock draws, and so I think we'll see the structure tighten up some, and if we do get any demand surprises on the upside, as you've been talking, as you said, Jim, on
Hmm.
gasoline, that may have a shot.
They have a shot, and so I guess related to that is without thinking about a peak in price, what part of the year do you think the price will peak out at in June, May, June?
That's a really tough question
Yeah,
because you just have no clue as to what. Yeah, not no clue. I mean, OPEC's given us some clue as to what they've also put out OPEC production month by month going forward, and if they stay by what their numbers are, I think the second half could draw some, and I think there's a chance for another peak in the second half.
so my final question on oil prices, the biggest option that I mentioned of open interest, the Dees 2022 $100 call. Do you think that has a shot?
Oh, sure. Come on, Jim.
I
What
know.
have we been saying since we started these podcasts?
I know. I know.
Right?
Yeah. I,
Anything could happen.
anything could happen.
Anything could happen. And I think if I was to say to you, no chance, right?
Yeah.
I'm sure you would go out and buy it right now.
Yeah, of course. That's a over the years, Andy, that's a winner.
That's a winner.
Yeah.
Anytime anyone says no chance, no way,
Yeah.
you got to think about doing it.
My favorite was always I don't know where I don't know where prices are going, but I know where they're not going. So I'm going to sell thousands of these calls. And then say, okay, let me get my grandmother on the phone because we want to buy a few for her account. But
Jim, if in let's see, so DC 2022 is 20 months from now.
yeah,
So let's say in January of 2019, I said to you, Jim, I'm thinking about buying some minus 20 puts for April 2020,
right,
or some flat puts, or some,
right.
$5 puts. What would you say to me?
Well, I my bias is I'm okay with you buying it, but don't sell it.
Right, right, right. That's true.
Yeah, that's my bias. I wouldn't turn that down, but
Right,
yeah, I'd say, what are you out of your mind?
right,
Probably.
exactly.
Yeah.
So,
Um, of the three, gasoline, diesel, and crude, um, relatively speaking, what do you like, say, over the next quarter? Which one's going to
I would
outperform
probably, since I think the cracks are going to soften, I like WTI,
WTI?
and diesel stocks have rebuilt. They had a big draw. They've rebuilt. We're in little surplus. We've got the planting season starting. I mean, the planting season is about to get underway. It looks like a lot of acreage, even though it
Yeah,
came in less than expectations. It's still the second most ever.
yeah. I wonder if it's going to turn out to be the most ever down the road. I don't know. I don't follow that market as much, but those prices look pretty good,
Yeah, yeah,
right?
I bet it's even strong. I bet it's even stronger.
Yeah,
And of course, manufacturing is just like sizzling. So, what follows sizzling manufacture, of course, is distribution of goods. And so, I think diesel demand will be pretty good. We're making way too much diesel because some of the jet is getting into the diesel pool. If jet fuel demand improves, then that diesel production will come off. So, maybe diesel, I would say second, and gasoline third, but only because the cracks are pretty heightened already.
right. And what was I going to say about jet fuel demand? You think is still going to be kind of awful for a while?
Well,
Picking up, but
domestic it's definitely picking up.
yeah,
U.S. jet fuel demand is definitely picking up. Again, as I said earlier,
yeah,
we've got to lift those. The international
right.
restrictions have to be lifted, and then there's going to be we'll see where business travel goes, right? Well, maybe
Yeah,
there'll be maybe everybody's going to want to go visit their clients, to begin with, and there'll be a big surge. But what's the long term? What's the change there? People going to want to do Zoom meetings after they, less face to face and more Zoom meetings. We'll
right.
see.
Yeah, these airlines have been stung so badly over the years by hedging and the mission creep of their hedging programs. I'm not sure it's probably something they could look at as they start signing up trips down the road. I mean, they're going to see ticket sales pick up, which they already are. I wonder if they're interested in hedging, you know, jet fuel as it goes, like not anticipatory, but just saying, you know what, we better buy the jet fuel now for trips that are being planned 3 to 6 months in the future, because if this stuff starts taking off, it's gonna squeeze into our profits, and we're still not back to where we were. So I don't know. I guess, like I said, they've been some of these guys will never hedge again after their experiences.
Oh my goodness, right?
Yeah,
Particularly, yeah.
yeah. So anyway, anything else, Andy? I think we could wrap it up here. You
Yeah,
want
let's wrap it up.
to? Good. Good.
You can, if you want more information about Commodity Research Group, we're on the web at commodityresearchgroup.com. And if you want to get a hold of us, my email address is alebow at commodityresearchgroup.com.
Yeah, and I'm more on. I have more of a LinkedIn presence, so I don't look at my email that much on the Commodity Research Group. I've got too many emails going as it is. But you can find me on, look me up on LinkedIn.
Yeah, me
And
too. And if you have a question for Jim, just send me, and you want to email,
yeah,
it will get to him.
definitely. Okay, thanks, Andy. I'll
Uh,
talk to you next month.
all right. Thanks, Jim.
Okay.